Hi, this is Jack from Alpha Charts with a state of the market video. Today is April 30th, 2022. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. All right, absolutely brutal Friday in the market. We're starting with the SPX here. And it has a very well-defined topping pattern. Again, I know the neckline is imperfect. There's probably some kind of diagonal type of neckline like that we could probably draw. That's probably more accurate. I know necklines aren't supposed to be diagonal. Whatever, don't care. That this looks important, right? Again, and this is a topping pattern. You want to call it head and shoulders. You want to call it topping pattern. Whatever you want to call it, doesn't really matter. It's obviously not good. So just something to really be careful for out there. Now, ugly day on Friday, and with markets extended to the downside, nothing saying that they can't go down more, but little snapbacks to let the moving averages catch up are very, very common. So, and again, an inside day or two potentially would be likely, I would say, in the next few days. And then be careful for that next move down, especially on low volume, inside days on low volume. Yeah, I mean, no signs of buyers showing up at all on the S&P. Distribution day on Friday. I mean, just really a lot of bearish looking signs for the SPX. Looking at the RSP, the equal weight. So it hasn't quite broken its area of significance yet, but again, lots of movement to the downside, very extended, 3% down day on Friday on an equal weight basis, which is, I think, very, very significant. And we haven't seen that, in a long time. So again, lots of issues. I don't even like this bar up here anymore. Whatever kind of topping pattern you want to call this, it's complicated. But if 145, 146 breaks, there's not much support down below, right? There's not a lot of volume in here. Comparatively, what overhead supply is looking like. This looks a little bit like the IWM from a year ago, but we'll get into that. Qs. All right, so Qs take it on the chin, a 4.5% down day on Friday. Volume was actually less than the day before, so technically not a distribution day, I guess, but still, it's really ugly, hard hit day. COVID low. The COVID VWAP is this purple line, and I'll show you where that's at. There's a COVID VWAP. And price is now below it, below this VWAP, which I'm just going to take out. So I have the COVID low VWAP. I have the absolute high, or the most recent high right here. I guess that would be absolute high. Right here, VWAP, below everything at this point. So that's not good. Looking at where else it could go to, I think this is the next major level of support, roughly 4.5% or so lower. That's likely. Again, is it going to go there one shot? Probably not, even though we know from Friday it could. But it's so far extended already to the downside. Probably not. But could it get there? Absolutely. But that's a place to see if support happens or not on the Qs. So there's another 4.5%. Again, after the beating that a lot of people have taken on the way down, that could be maybe a capitulatory move into that 295-ish area. 300 300 on the Qs has always been an important spot. We'll call it 295 to 300, that general area. Looking at the equal weight Qs, I mean, head and shoulder, smaller head and shoulders, bigger head and shoulders, coming rest of the neckline. Next major support is I think the $60 area. And on the equal weight, that is about 12% lower. That would be a very significant move, right? So don't know if that's what's going to happen or not, or if it gets all the way down there, maybe it stops shy of that. but that's pretty significant. So it's trying to finish off this topping pattern. Again, that's pretty nasty. Going back to SPX for a second, the COVID VWAP is over here at 380, 38.37. And so if you do a measured move from here to here, which is a potential neckline, it's roughly 11%. And then here to the COVID VWAP, which is right there, it's close enough to a measured move to using this as the neckline, right? So this is the neckline, which would be more traditional. And this was maybe just undercut of the neckline, rally back to create the right shoulder. And now the follow through to downside. So this COVID VWAP is a spot of potential support, right? So that's definitely something I am watching if price continues lower, which I think it will. Nothing on this chart says it won't at this point. This COVID VWAP would make sense to finish and complete this topping pattern. So again, area of interest, not guaranteeing that's going to be support. And that again, from here to the COVID VWAP is about 6.8, we'll call it, 6.5, 7%. Okay. So there could be a decent more pain. We're talking about 6.5, 7% there, SPQs, to this particular spot, it's only, I think we said 4.5% or so, 5%, right? So Qs have at least 5%. And listen, it doesn't have to stop here just because I drew the line there, right? It could come down here, could come down here, right? That's a possibility. So we'll see. But down is the theme right now. Again, not in a straight line, but that seems to be what is very possible. All right, let's look at IWM. IWM, we're looking at this five wave pattern. Again, here's that consolidation all of last year, basically, and then the breakdown from it. I still think that this area is going to be very important if and when it gets there. And roughly that is 8%. So you're seeing 8% till major support is a theme on most of the indexes so far, right? Roughly. So again, the Qs may run to 10 or 12% because they've been leading to the downside, but about 8-ish%, that seems to be about the average S&P and now IWM. So, again, is it going to get there in a straight line? Probably not. As it gets extended, it may get a little bump up like you've seen along the way, even so it may even look like a turn, but the trend is strongly to the downside. I think I still have a question mark there, but I think it's very likely that we hit this area. We'll see. I mean, again, it makes sense. Doesn't mean it's going to happen. Heck, there's a little gap right here. Maybe we undercut it, right? And just close this gap. That'd be interesting, huh? That's let me put a line there just for funsies, right around there. Anyway, we'll see if we undercut it, hit the 166 area, and then bounce up. We'll see. That may be the capitulatory move we need. Moving on to IWO. Very similar to IWM, but remember, it just takes out the growth IWM, and we are actually in the potential support area, right? So this is going to be interesting. One of the things I'm looking for is does the growth area start to rebound first, and maybe it comes down and hits 220-ish, which is nothing. It's almost there at this point, right? We're talking about 2% lower. So maybe after the Fed meeting, I think it's next week. I don't really pay attention, but I think there's one next week. Maybe they say something and it starts to hold here. Now, if it starts to fall below and really starts to take out, get underneath this area, that would be a very much more bearish scenario. So we'll see if it continues. Again, it's trying to finish the 5-wave pattern down. We'll see if it can hold, 218, 216, somewhere around there, 220, right? If it can hold anywhere 218 or higher, that's a very big positive for the market, even if the rest of the market's declining. It's one of the things I'm watching to see if growth starts to dig in this area. Now, again, if growth free falls right through it and it doesn't even care about this area, then it is what it is, right? So something we're watching, especially this week, how does IWO react to this area? That's the first thing. Look at mid caps. Mid caps are, again, starting to break down from this consolidation. This was another mini area of support. We'll see if it holds again. It's held kind of for a while now. If it breaks through, the mid caps could be in for a pretty good fall. That'd be 17%. That'd be pretty significant. They've been holding up better than most, to be honest. So if we lose the mid caps, that'd be another significant blow, but it may be the breath washout we need, right? A big washout of mid caps. We'll see. Rising rate environment, we would expect XLF to do well, and it's not. So it's losing this area of support, and chances are it's going to come down. That's about 11%. Again, this is a major area when you really look back. Actually, I got to go to a weekly to show you what this is like. This was the 2007 highs right over here, and it was important over here. It was important here. This was an important breakout as the run up, and now it looks like it's going to make a round trip back to retest this. So it's a pretty important area. XLF is losing it. That being said, I think that is obviously bearish for the market. We like XLF to at least participate, if not lead. XLF is doing none of that. SMH, the most important sector, coming almost into this area of support right here, right? So again, there's been a ton, like it's down from the highs, 28%, right? That's pretty significant. Here's area of support, about another 4% or roughly lower. This is going to be significant, right? What does it do here? That's the significant piece of that. Does it dig in while IWO is digging into its levels and hold here? That would be the bullish scenario, right? So a little bit more pain and things are starting to dig in. If it rolls over and continues right through it, or end of next week just kind of sits in that area, which is very possible, then we'll have to see. Right now, there's no guarantees that this is going to hold, but it's an area I'm watching. Okay, so let's continue to watch this area as the week unfolds. But now we have two potential areas of things that are coming into support first, right? Some of the things will be later into support. These will be the first ones most likely into the support area, and how they react here is going to be the most important thing. Okay, so let's definitely watch that. Lumber was starting to look good last week. We were kind of optimistic. We'll see. It did make a higher low. Again, we'll see. Does it lead out of here, or does it roll back over? We'll find out, right? Lumber leading would be the bullish scenario. Lumber just chopping around, no signal at all. So let's just move on, because right now it's not doing anything. VIX has been important. I think VIX over 40, above 38 for sure, right? VIX above 38 to that 40 range, or even above 40, that is going to be maybe significant for a bottom to occur. We'd love to see it just spike with a capitulatory move above 40. Again, no guarantee that's going to happen, but that's what I would love to see. Okay. What else we got here? Bonds. So bonds, again, going to line chart, taking off my moving averages and volume, because nobody cares about that for the rest of this video, really. All right, so we want to avoid this, as we always talk about. Avoid things that look like this. What do we have here? Is it the start of this? I don't know. Maybe. Every time it could have been, right? It's come back down. Every time it could have been, it come back down, right? So as of right now, trying to break out again. We'll see if it spikes and goes literally straight up like this. Again, this was scary back here in March, and then it rolled right back over. So it's making another potential run. We'll see if it makes a higher high. But again, anything that looks like this or the start of this, that would be very, very significant, right? So that's what we're watching. Let's look at TNX real fast, and let's go to weekly. So here's the trend line from, again, early on 1981 all the way down. Prices right there at the trend. There's also some, right at the 3-ish level, 3.1 level. There's some significance there too, potentially. So we'll see how bonds, this 10-year yield reacts to that, right? A pullback here, again, that could be, or some sideways movement, then a pullback over the next week or two. That could be helping with a bottom forming if the 10-year starts to pull back. It's literally gone straight up, in March, hit this trend line. It's right at the trend line now, Yeah, I don't care if it like here shows it broke it through like that. My trend lines, I just make a thicker line if necessary, right? It hasn't really broken it with significance. Above 3.1, that would be significant, right? Above 3.1, things get really nasty really fast, and everything changes. So we got to watch what TNX does here, right? What the 10-year yield does. Put call ratio, right? All this nastiness in the market. Well, of course, people must be all the way bearish, right? Well, when we really look at it, yeah, not so much, right? I mean, we're looking for above 1.4 sky. World is ending, and we'll take the other side of that bet, because I'm going to bet the world's not going to end every time, because if it does, well, who cares at that point, right? But if it's not going to end, well, then we may be in the right spot. The world was going to end back here, going back. World was going to end, right? Going back, 2018, world was going to end, right? Again, this is important spots, extreme fear. And right now, we're not seeing any extreme fear. Again, need that capitulatory run. Maybe this is the start of it, right? Maybe this is getting to something that looks more like this. And if bottom could form, that's what we want to see. Things at or beating this 1.4-ish level, which I put in there. That's what I consider significant. If it's 1.38, am I going to make a fuss? Well, it's pretty darn close. I'll be looking for other signs of bottoming action. Remember, this is a secondary indicator to price. So again, it's just one piece of information, but as a contrarian point of view, everybody up in this area would make me very bullish. Value line geometric, which is a study of breadth. It shows you breadth is obviously breaking down. It lost 600, significant loss, I think. So breadth is starting to wash out, and we'll look at the MMFI to see what we really like to look for. Again, so 24% or so is above the 50-day moving average in breadth. I want to see it under 10. So again, a capitulatory move may bring that to under 10. And that may coincide with some other indicators, which we'll talk about in a second. Okay, looking at gold. Well, why isn't gold doing better, right? Like, you would think that gold should be like doing better, and it's just not. Now, at a weekly chart, it's not technically doing anything wrong at this point, but it's definitely not screaming higher like it could be. So I think that's a positive for the market, actually, even though this pattern is pretty significant if it does end up breaking out. Again, right now it's a lower high. So we'll see if this continues and what happens here. Again, weekly chart. But right now, gold isn't saying problems to be had. And then Bitcoin. I like bar charts for this, to be honest with you. So Bitcoin lost 40,000, lost the trend line. Actually, this trend line is more significant on a closing basis. Lost the trend line. Is at 38.5 right now. Markets are closed this weekend. Bitcoin is not. Would love to see if it makes a move for the 30,000 range. That was, what would I say, 20% lower from here? It's about 20% lower. Listen, it can make 20% move in 2 days, a day, whatever, because that's Bitcoin. That's what it does. So we'll see what happens. But I think if Bitcoin does get into this area, that would be really significant and a potential area for a market bottom as well. So that's something else that we are just kind of watching to see if it happens. It doesn't have to, right? Maybe it gets down to, test this area again. Who knows? But I think that this is a major area. And a lot of people are watching that particular area. So market bottom. Let's talk about market bottom. What are we looking for? And it's really the same stuff we've been looking for last week and the week before, right? We've been talking about this is, markets are in a downtrend, and what does a market bottom look like for a while now. So I'm hoping that these videos have helped you all stay safe out there, and tell you how poor this market was. What does market bottoms look like? So VIX, let's look at the VIX. First off, VIX above 40, right? We want VIX, in this range, right? VIX gets in this range, maybe a potential market bottom could be happening. At the same time, we want the put call ratio. We want sentiment to be above 1.4, right? So VIX above 40, sentiment above 1.4. Now we have two marks that are potentially, positive and market bottom. Remember, we're looking for extremism, right? Then we're looking for breadth to be completely washed out, right? So we're looking for the percent of stocks above the 50-day moving average to be under 10%. So then we have three check marks, right? We have VIX over 40, put call ratio above 1.4, and now we have percent of stocks above the 50-day moving average under 10%. That's everybody on one side of the boat. Qs, you know what? I think the Qs coming in to this 300-ish level, right? Or potentially even undercutting it. So that's around, another 6% lower. So maybe even undercut of that level. That would be in a potential area of support. That's interesting, right? IWM coming in to the 170-ish level, right? And potentially even undercutting it, going out of the way down to 166, now another 10% lower, but even 170-ish, right? Coming down to this level at the same time, that would be very bullish. And while all that is happening, I would love to see IWO stabilizing, not making new lows. That would be bullish too. It doesn't have to happen that way, but that would be very, very bullish as well. All right. Obviously, we want to see the 10-year yield, start to retreat. That could be another bullish sign. That one's doesn't have to be. I'm more looking for price action of stocks than anything else. So stabilization. And then we can look for a lot of things that are setting up and everything like that. But there is potentially a lot of pain ahead, right? Not a lot. We've already had a lot of pain. Oh, and by the way, I would love to see SPX. I could add this to the list, touching that VWAP, right? So actually, I'm gonna add that to the list too. I'll do it afterwards. SPX touching that VWAP, all at the same time that you have VIX over 40, put call ratio above 1.4, wash out of breath below 10%. The Q's hitting, 300-ish, 298, whatever. IWM hitting 170, 168, somewhere around there. All those coinciding all together. Again, you don't have to check off every box, but a lot of those boxes. And then I'll be looking for signs of stabilization, right? Divergences and whatever else, right? And again, places to manage risk. All right. That's what I got for you today. Hope you all stay safe out there. Good luck. If you're short the market, you're probably doing well. If you're long the market, you're probably not doing well. Again, this state of the market video is trying to keep you guys on the right side of the market. Hope it's helping. Take care. Bye. Oh, before I forget, like and subscribe and tweet and retweet. Thanks. Bye.